Hey traders, welcome to, there we go, charts and coffee should be good to go. All right, happy Thursday, everyone. Hope everyone's doing well. All right, good morning, good morning. All right, so a couple things wanted to mention. I've got the morning notes up and running. We just had the CPI at 8:30, and this is probably a more realistic inflation gauge than say the PCE, but the PCE is the Federal Reserve's preferred hot zone in terms of data around inflation. So ultimately, this is a market mover. I mean, obviously. So it's never, ever, ever about, gang, it's never about looking at what the PCE was supposed to be versus what it came out as. What it is how did the market react? And there's three places we can look. All right, we can make this really simple and look at the three places that give us a broad understanding of the way in which this information has been digested. It's not necessarily the NASDAQ, right? It's not necessarily the NASDAQ. And the reason I say that is because the NAS is obviously very tech heavy, tech, communication, consumer discretionary. And you've got the Dow, which is more tech, healthcare, or I should say financials, tech and healthcare, energy, right? By the way, transports and industrials are way down the totem pole in terms of the Dow. And then you have the S&P. The value of the S&P is not because it is the reason the markets move. The S&P is sort of a representation of the weighting of the sectors in the Dow and the weighting of the sectors in the NASDAQ, right? So that's the way we look at this. Ultimately, the S&P is a great mix of the two, so it's a good place to look, right? You can just sort of get a nice bouillabaisse of what's going on in stonks by looking at the S&P. And you can see there at 8:30, whoosh, we went lower. Now, I think there's a few things we want to be ready for. And if you've been watching the content that I've been putting out on my channel at Raghee Horner or at the Simpler Trading YouTube channel, the last few weeks, I think we've been deep diving how to get that early sentiment read. And two out of the three tools that I share with you all are things you can do manually, AKA for free. They're going to give you a great advantage if you just look at that previous session close and the 5-minute Pingala. These are not indicators, right? These are just processes that, sure, if you'd like to automate, great. If you don't want to, they're perfectly reasonable and simple to do manually. So keep an eye on those two as we open up. But right now, we're trading below the previous session close. Obviously, a lot of volatility because the two hourly price movement range zones, the red and the green, sandwiched together. That is by design. That is a warning that the volatility is exceeding or getting close to exceeding the 68% probability of historical volatility for the S&P. So generally speaking, the movement was lower. If I go take a look at the target rate probabilities, right? If I take a look at the target rate probabilities, it's probably just notched a wee bit higher, not for a rate hike this year, but likely just staying higher for longer, right? Because the soonest we have a fully discounted rate cut in 2024 is the July meeting. That's a long time from now. And bonds are pretty much saying, hey, Jerome, you're keeping rates too high for too long. ZB, what is the ZB moving lower telling us? ZB moving lower, the long bond, the TLT is the ETF alternative. This is telling us that yields are going higher, right? So the direction of yield, whether that percentage is up or down, is inverse to the movement on TLT and ZB. So if ZB is moving higher, rates are moving lower, right? Since ZB is moving lower, that is rates are higher, and generally stocks don't like that. But please don't let correlation dominate what you think another market is going to do. If you want to know what a market's doing, a particular symbol, look at it. If you're looking at an index, look at the index. Look at the sectors heavily weighted within it. Look at the stocks heavily weighted in it. Don't look at ZB or the US dollar or VIX and think a correlation is going to give you insight into what that index or sector is going to do. Sure, there are generalities. Stronger dollar, generally equities don't like. Higher yields, generally equities don't like. But please remember, equities have been generally on a move higher throughout 2023, while rates have also been moving higher. So please discard the dogma, even though it's repeated again and again and again. How often do we actually stop and think to look at the two charts and say, gosh, I hear this repeated a lot, right? But is it true? And it simply isn't, right? We've had stronger dollars, stronger equities. We've had stronger yields, higher yield, and stocks moving higher. Look at why the indices are moving, and the why is not always going to be the rates and the dollar. By the way, I look at the dollar through the 6E. But you might say, but Rag, isn't there a connective thread? Yes. In fact, last week in the Top Tier Outlook newsletter, which our Sector Secrets Mastery folks get included with their subscription, that's something I tackled. And I said, look, the common thread, the glue, is monetary policy. Hawkish, meaning either favoring higher rates or just staying at higher rates. Hawkish is typically not going to help stocks. But we've been hawkish all year. Stocks have been generally going up all year. All right. So that's why I look at that CPI at 830. We're moving lower. Notice, I don't know. I'm not even talking about what the expectations were or even the result. Doesn't matter. We can see it in Euro. We can see it in ZB. We can see it in ES. All right. So next up is, and let's see, from our Simpler Essentials room. Hey there, Lou. I've been putting the PSC and Pingala on trading charts every morning. Very helpful. Yeah, Lou, there's a lot of cool old school things we can do manually. I almost sometimes, look, it was harder to trade 30 years ago in that the automation wasn't there. In fact, we didn't have streaming charts. A lot of charting was done by hand. Indicators were very simple because we didn't have retail traders didn't have all the tools we have now. And I kind of wish everyone got to have at least a year or more of sort of old school charting your own price charts, writing them all out, calculating your own indicators. It's really interesting how if you come from that older school of trading, indicators are just automating things that you did once upon a time manually, which is a very different philosophy as opposed to, sadly, the sort of black box mentality that's taken over trading, which is computers are able to do unbelievable things. And now it's just, well, this is a magical black box of algos. I don't like going that route because I know for me, I bought black box things back in the late 80s, early 90s. I bought this nonsense and I thought, okay, this is the thing that's going to turn the corner for me. And then inevitably there's a drawdown. And the problem is I lose faith in myself and in the tools because I don't know why it's plotting what it's plotting in the first place. So one of the things I love about the indicators I use is my ability to tell you, this is what it is. This is why it's doing what it's doing. But just like an automatic transmission in a car, as fun as a stick may be to drive, an automatic just does it automatically. But I essentially know what's happening, right? So I hope that makes sense. And yeah, Lou, it's been great. Okay, so as always, gang, the show is all about your questions. Phone lines are open for your requests. So let's get to it. All right. First up is Alex. Good morning. CPI pre-market trade on MNQs, the micros. Question: do I typically, so let's jump onto the NASDAQ. Do I typically hold into the open if your target has not yet been hit? All right. So I'm not sure. Let's see, pre-market trade. I'm not sure which way you went. Short or long, I'm not sure, Alex. But do I typically hold on? Alex, grab the 50% between the ranges. I believe you may have hit that. I'm not sure. Move to a break even. I typically don't like to, quite frankly. But to your point, you can just know where your stop is. Maybe work from a break even stop as we go into the open, or just some sort of risk oriented management, because the open can be its own nuttiness, right? HPMRs are working out wonderfully. Alex, they just work, right? This is a process that I've been using for coming up on a decade now. Again, manual process that we're now automating, and even better with the HPMRs, I'm able to have a curated data set. That's exactly what I want. So shout out to the bot for that. All right, next up, and thanks for the question, Alex. Maybe move to break even or think about how you can manage risk best into the bell. How do I avoid the over trading mindset? Anthony, I'll tell you what, I have a very different philosophy on um, losses and lessons about trading. I think a lot of traders, and I actually apply this to life, a lot of times when something bad happens, there's a bad trade, quote unquote bad trade, I didn't follow my process, FOMO, etc., kicks in. We like to somehow pacify the whole thing and say, well, I learned a lesson. Gang, I'll tell you what, I actually hate that. I know it sounds so evolved. I actually think when I make a mistake in trading, I want it to sting. I want to remind myself of it. I really want to suffer a little bit with a mistake. Now, a mistake is not a bad trade or a losing trade. Bad is not a losing trade. Bad is my not following my sequence for the setup. Bad is not my not taking profits when I can, not when taking profits when I can, not when I have to. Bad is when I don't manage risk. Bad is when I'm not consciously deciding my position size. There's a lot of things that would quote unquote define a bad trade. So over trading is one of those bad things. On a day that I felt that I overtrade, I really want it to sting. I don't want to say, well, I learned something today. No, I'm going to say I lost money. It really hurt, and I don't want to feel this way again. So to me, let the pain of, let the pain actually sit in, because we have this terrible habit in life of saying, well, I learned something. No, you learn that you never want to do that again. That's the way I look at it. So when I overtrade, when I don't follow my sequence and I lose money or I have a disappointing day, I try to remember that. And so it's really easy not to overtrade because I remember the pain. Now, here's the trick, Anthony. The most dangerous trade in the world, and I see it all the time, is when traders break all of their rules. They kind of say, this is an exception. They go off and start freestyling it like it's the X Games, and they win. Put a big black X on your calendar, because I promise from that day forward, it's an inevitable route to blowing up your account, because all of a sudden now the pig in the head says, oh, well, the rules don't apply to me. So my theory is the same. If I lose, let it hurt. And then remember that, right? Trauma teaches. My father likes to say that a lot. Trauma teaches. And I think that's true. All right. Let's see. That's me. All right. So they watched my Pingala video the other day. Can I go over it again with yesterday's open? That's me. Yeah. Look at the first 5-minute candle and draw that zone. I mean, that's really it. Look at that first 5-minute candle, draw the zone as I've shown you all to do. And it's going to be, and I don't know which symbol you're talking about, my friend. So, but again, what it basically is first 5-minute candle, 9:30 to 9:35, got a 5-minute candle, draw those retracements in there, put a rectangle over it using your drawing tool if you'd like. And then if price is above it, then that's support. If price is below it, it's resistance. That's really it. All right. Christian asks, for day trades, if price action violates or breaks the Pingala 935 candle, would you exit? So, gang, I know it's a new and shiny, but it really isn't. It's a very old school thing. Is that the only thing that I'll look at? Absolutely not. Christian, what do we know? I think what happens a lot of times, and I get it, it's human behavior. We get something new and shiny, and then we let that supplant everything else. We want to supplement. So what are the 3 things? Previous session close, multi-trend readings, hourly price movement ranges. What is the setup, right? That's always going to be the main question. This is one more way to get the sentiment on the day. My favorite sentiment read, by the way, is the multi-trend. After that, I look at a combination of the 5-minute Pingala and the previous session close. All right, next up, how do I know which, Lunaire asks, how do I know which underlying to trade, meaning that there are times when your indicators point to my placing a trade being successful, but you don't actually make the trade? Relative performance, Lunaire. The question really is a watch list question. And that's actually my topic for the Orlando Summit coming up. So for those of you that have signed up, don't know, I think, oh, I do know, I'm going to be speaking last on the day. So one of the things we're going to be talking about, I'm going to do 2 things during that presentation. One, I'm going to go ruthlessly over my swing and day trades using TradesViz in that session. Because look, The only thing that matters is not a good day or a good week. How do we look at the end of the month? And since June, I didn't do July because let's face it, July was just straight up. June, August, September, I did a recap at Countdown Trader of my entire month, right? Of my entire month. And I think that's something that a lot of you have been asking for. I've got a platform now that I really like that I can do this with. So that's number one. The number two topic is going to be watch list building. And it's always built on relative performance. Always built on relative performance. All right. Next up, hey, Jess, I don't want to ignore your question, but I don't trade credit spreads. So far be it for me to give you advice on something that I simply don't do. I do three things, gang. I like to day trade ETF options and stock options. I like to day trade futures, and I like to swing trade ETFs and stock options. They're all going to be in directional, right? Long calls, long puts, or just long and short. And I don't do spreads. I don't use a margin account in my options account. Not that there's anything wrong with them. It's just not the way that I like to trade. And in my room, now remember, gang, a lot of folks talk about what a small account should do. But remember, if you have a small account, pattern day trading rules a problem. The only way a small account can actually function is either not trade very often, which is fine. That's probably not a bad thing, to be honest, or use a cash account and go long calls, long puts. And that's what I do. And I'm not in a small account anymore, 30 some odd years into my trading career, but I still trade long calls, long puts. So while some of my Sector Secrets Mastery folks are going to be trading, say, 2 options or 4 options, I might be trading 20 or 40. But as long as we're focused on liquidity and we're determining position size based on risk to account, this is a scalable mindset. And so that's just kind of the way I look at it. And I don't like, nor do I trade spreads. Nothing wrong with them, but they present a lot of challenges to many, many traders. So again, trading SPX spreads, awesome. But if you're trying to grow a small account or you have low risk tolerance, that's a very untenable way to go. As sexy as it may seem, remember what's appropriate for where you are right now, the chapter in your trading book that you're in right now. Okay. And then ask yourself if what I'm doing now scalable. A lot of folks who do small account type trading, they risk an amount that if they had 10 times the amount in their account, they would never do it. So there's a lot of things happening that are not scalable. Ask yourself, if my account was larger, would I still put on this trade? Right? I see people in small accounts regularly risking 20, 30% of their account per trade. Untenable, unscalable, right? So to me, spreads are just one aspect of that for me, I know I don't like and doesn't work for a lot of traders. So and for some folks, they love it. So that's just my opinion, right? For some folks, they love it. They do great with it, but it's my job on this side of the camera and the mic to say, hey, this is what I actually do in the room with everybody. All right. Penelope says, last question. I remember the other day, a guy in the room not understanding break even. I think if maybe we can only afford 1 or 2 contracts if we closed. Penelope, so what I would recommend is when you're scaling out of a very small number of contracts, it probably doesn't hurt to either close the trade at the first target or even just scale out of one and keep the other one at break even. I mean, those are habits we're trying to build. Right? Those are habits we're trying to build so that when we aren't trading, say, 2 contracts, we're trading 22 contracts, we're able to take advantage of those bigger moves. Whatever we do now, the habits we build now, gang, both good and bad, just scale. So when you're looking at your larger accounts, I see a lot of traders, they'll start with a small account, they grow it to a large account, and then they implode back to the small account. Who's been there, right? The reason for that is the things that were done in the early stages of account growth were not scalable. So as soon as the first round of drawdowns came, the account imploded. Those are things to think about, gang. All right, we got a little deep here. On on charts and coffee. Have a great rest of your day, my futures folks, my Sector Secrets Mastery folks. I will see you all in a moment. Be good to each other, gang.